On this microphone too. All right, there we go. Good morning, good morning, good morning. What is up, everybody? Happy Thursday, March the 27th. Hope everybody is doing well. What's up, new trader? Good to see you. Let me get over here to the chat. And I've got my YouTube chat open. What's up, folks? How's everybody doing? It is Thursday, March 27th. Like I said, JT here with another Xtrades FOMO live stream. I hope everybody is doing well. Hope your trading week is off to an excellent start. We're going to go through our typical motions here. We're going to take a look at what's going on with S&P futures for a little bit, just kind of get our bearings for market sentiment. We'll go through some trade plan recaps from Tuesday's live stream, and then we'll get to some new trade plans here this morning to work through some of those. Unknown reviews, what's up? Good morning to you as well. Already in the mix with Lulu. Hear about ES levels and overall market feel. Yeah, sure. We'll talk about that, new trader. In fact, maybe we'll have a good. Actually, this will be a good opportunity to get into some kind of higher level market stuff. I'm actually glad you asked that question. So I'm going to go ahead and pull up the SPY chart so I don't forget, and we will shift over to that. But I was talking with one of our other top earner goats, one of the guys who's been in Xtrades with me for, I don't know, as far back as I can remember. He was maybe even at Xtrades before I was there, or before I was here, I should say. 007 of Wall Street. Everybody knows him. Very, very smart guy, knows fundamentals backwards and forwards. If I ever have a question about fundamentals, he's the person that I personally go to. So he and I were kind of chatting in DMs yesterday, talking about some of this stuff, and definitely, giving off some shades of, 2022, I would say. Well, let me hide some of this stuff. Well, but I do want to shift over and talk to this. Actually, it's a good topic to cover, and also will give us some targets and stuff to look at and talk about if this pullback does indeed go the direction that I personally think it's going. So we'll get into that though here in just a few. So let's talk about ES futures, where we're at right now, and then we'll kind of switch that over to SPY and talk about that from a bigger picture perspective, and try to what we're going to do, just so you all have a heads up, is we're going to talk about some kind of key buy zones that we definitely want to keep an eye on as far as market activity goes, if this does kind of wind up playing out the way that I think it might play out. And I'm certainly, not going to claim to have a crystal ball. What's up, Shinobi? Good morning. Good to see you. What's up, Ryan? Good to see you as well. Flo, we'll try to take a look at Flo. What's up, Navy Plum? Good to see you. Good morning. Good morning. I know I'm bouncing back and forth between YouTube and Discord, so if you guys feel a little disjointed, if you don't see somebody's name that I'm mentioning, it's because we're broadcasting everywhere all at once. Anyway, ES futures, we are starting to show signs of weakness. We talked a lot in the chats, especially last week, just kind of about the volume that we were seeing as SPY was trying to push toward the upside and recover some of this steep sell-off that's, I think been heavily driven by just overall economic uncertainty, and what's going to happen with these tariffs and how that's going to potentially impact things. And, the word recession is getting tossed around again. I think that's something that gets overused, but I certainly could foresee, a continued, prolonged, and exacerbated trade war could absolutely trigger and lead us into a recession if America was kind of not just coming out of this fight against inflation post-COVID, and a lot of that driven by by the COVID supply chain issues and stuff like that we experienced way back when. That inflation became sticky. Once these businesses figure out that they can charge you a certain price for a product, they have a very hard time ever walking that back. Even if their costs are coming down and their profit margins are increasing, they typically do not then adjust their pricing. So that's why, inflation becomes sticky. is those prices stay elevated because they figured out, oh shit, we can charge people this and they'll pay it. So why would we, roll that back at all? So that kind of triggered, a domino effect as global supply chains got squeezed. We had inflation ramp up throughout the Biden presidency. They, I think, did a fairly good job between, and really kind of props to the Fed on this, navigating a lot of that via interest rate decisions. I mean, certainly interest rates are higher than anybody wants them to be right now, but that was also, I think, kind of the rubber band effect from injecting far too much liquidity into the economy to try to keep things afloat through COVID, assuming that could be a more prolonged issue than I think it really wound up being. But again, we still kind of have all this holdover inflation that we've been dealing with. I think that the progress on that was going well. And the markets were certainly showing us that as we pushed toward, all-time highs recently going into the tail end of last year. But, then we kind of, have a change in administration, and now tariffs are the, something that we're talking about, going back and forth on every day. Are we going to have tariffs? Are we not? What's going to have tariffs? What countries? Who's going to have exceptions? There's, from my personal perspective, and I'm going to try to keep this not political, I think the problem, if we're looking at this from a market standpoint, that we're seeing right now is there's not a plan, right? Like there's no clear vision for how this all plays out. It's just, we'll come in and we'll start slapping tariffs on everything, and that'll be good for us in the long run. And I think that's kind of a hard nut to swallow. And it's gonna be interesting to see if these start to go into effect, if this does not trigger some kind of a major drawdown and potentially ultimately a recession. So kind of higher level inflation tariff talk behind us and how that potentially impacts things from a market perspective. Again, ES is seeing this pullback. We were trading on very low volume as we made that kind of push back to the upside. That's something that we called out multiple times. It's a little bit hard to really gauge the validity about or of some of these moves, especially when we're grinding to the upside with sort of some of these dark clouds on the horizon, especially when it's on like half of the 30-day volume on SPY. And the 30-day volume, I think even that number's a little bit low because the market participation has been down. So, so again, that makes it very easy for things to kind of get very volatile, because there's not kind of a volume-based fight happening in the background as price decisions are made and support and resistance decides whether or not it's going to hold. So as we look at all this from an ES perspective, again, we've had this little bit of a bounce. We did clear out through some pretty tough resistances, but a lot of that kind of got erased and very quickly. In my opinion, we made it up over 5,800 briefly. We did have some targets overhead there on ES. We didn't even really get to that first price target, which I was a little bit surprised to see that. I mean, in hindsight, I could certainly see where there's, obviously I had some levels here, but I really thought the important level was going to be 58.44. Maybe I'm kind of splitting hairs there by saying we didn't. I mean, it's really not a big difference between where we topped out from a futures perspective and where our target was. It's just a few points, but it's a little bit shy for me to kind of say I think we tapped that resistance, right? Obviously, the resistance was lower, and I was looking a little bit further out or a little bit further overhead. So, we're trying to hold this 57.40 area. Yeah, 58.50 is going to be a very challenging spot for sure. I agree, Shinobi. I really appreciate you being here and providing your insights as always. Just recently elevated to analyst, and I think long overdue. So good to have you in the mix as always. Oh, I'm not sharing anything? Oh, buddy, thank you so much. See, I get so into what I'm saying. There you go. All right. Sorry, Discord. You guys should see all this now. And honestly, it's been mostly talk anyway. So, but yeah, now we are getting into some stuff. So 5,800, again, I'm looking at these areas. I was looking at 58.44, 58.50, pretty close to what Shinobi was looking at. We've topped out a little bit lower than that. pretty clear bear flag that we're forming here this morning. 5740. I'm sorry, 5740. I said that right. 200 SMA did pop over the 333, so that's a bullish crossover. 333 is still kind of pointed to the downside. And we do seem to be holding this 200 SMA as support so far as this kind of bear flag starts to form. So we do have 5740 confluence there with that 200 SMA, but I think if we lose that, we could certainly see this pull back pretty deeply and pretty quickly. I would be looking for downside targets. Probably there's potential here at 56.95. I don't see a ton of potential, but we could see a quick little dead cat bounce there. Ultimately, I think a good target would be this 56.55 downside wise. If we break below that, I think we're retracing all the way back to 55.61 and potentially making a new low on the year. So what's up, Chris? Good morning to you. Hope you're doing well. So let's talk about this going back to, I think, where I was really trying to get us to as far as, this kind of being shades of 2022, right? So back in 2022, this was early into the Biden presidency. We broke down through this really kind of strong weekly trend. In fact, let's zoom out to the weekly chart. That's going to make this a little bit easier to look at and digest. We had held this weekly channel going to the upside post-COVID. Markets were doing something like a 20+% return. I don't remember the exact number over, I think, about an 18-month period or something like that. It was very, very frothy, as they say, and I think a little bit unsustainable, right? So not surprising that we ultimately saw a pullback and a breakdown out of that very strong upside channel. So this is going into 2022 now. And back at that point, I shared with some friends and colleagues, hey, I've got some kind of areas now that we've broken out of this upside channel. I wasn't worried about any dips going as long as we were up in that channel on the weekly, right? So as soon as we started to see this kind of breakdown and then things back testing and rejecting like we saw here, I was immediately like, okay, this is actually, not good. We probably are overdue for a pullback. We were way overextended to the upside. So, let's start to prepare for some downside. Let's look at some zones where we might want to, potentially start loading back into shares with the idea that we're going heavy cash. And anybody who was with Xtrades back in 2022, will tell you I talked about this quite a lot. We even got into some kind of light overall financial planning discussions. But again, nothing we say here is financial advice. All of this is just my personal opinions and thoughts. But as we looked at this 2022 scenario, right, I kind of had these different zones: red zone, yellow zone, green zone, right? Red zone is we might bounce here. This could be the bottom, but I think that seems a little bit too optimistic in my opinion. We were still pretty overextended. Even pulling back that far, you can see how far overextended we were from the 200 SMA here on the weekly chart. So, we were hot and frothy moving to the upside there, like I said. So red zone, yellow zone is okay. You might want to start thinking about pushing in some stuff into some equities, but don't go, full position sizing or anything. And then green zone is okay. We need to start, shifting everything back into equities. If there's more downside coming, I don't think it's going to be that much more. I hate to say I called it, but I did. We tapped the top part of that green zone and have never looked back since. So that's 2022 scenario, right? Here's my 2025 kind of setup, and we're seeing something very similar, right? So we came down, we tapped this red zone here in 2022, and we got a nice bounce out of it, right? We came here, we tapped this red zone here in 2025, and we're starting to see a nice bounce coming out of it. Now, this bounce may not bounce as high, and I think that what we need to start looking for is the next top to start finding a trend on the downside that will probably drive us down toward this yellow zone and this green zone. Ultimately, 200 SMA, you can see we're pretty overextended from that once again. So mark these levels on your charts if you want to kind of think about this stuff bigger picture, on where we might want to start buying the dips again. I think I've said this a number of times in the chats. I am heavily cash at the moment as far as my overall exposure to the market and equities. So these red, yellow, and green zones, kind of like how I set this up back in 2022, is exactly how I'm looking at this again here in 2025, and I'm seeing a lot of stuff that looks very similar. So again, that's purely technical analysis, chart based. I think it's the downside move is going to be driven by politics at this point. There is a part of that is going to be decisive in how this actually plays out, because I think again the big concern here is, do we push ourselves into a I will say, in my personal opinion, unnecessary trade war that drives inflation, slows economic growth, disrupts global trade, and ultimately, makes things pretty tough for a little while, and the market will respond accordingly. So anyway, yeah, these are what I'm looking at. I think this is a good time to start talking about some of this stuff, bigger picture, because again, I'm just seeing things that remind me a lot of what we saw in 2022. By no means do we necessarily have to repeat what happened in 2022, but I think it's certainly something that we should be prepared for, especially with the direction things are going with regards to tariffs and trade wars. So anyway, this is, again, just my personal thoughts and opinions. I nailed it back in 2022. Maybe we can nail it again here in 2025 and use these opportunities to really, compound the growth in our accounts. I mean, everybody, I've seen a couple of people say, oh man, this sounds scary. Well, it's not. It sounds fantastic to me to some extent, because I'm heavy in cash, right? So I want to buy everything on a discount when it does ultimately pull back. So that's just how I'm approaching it personally. I'm not suggesting that you do the same. This is just, again, kind of how I'm looking at all this. So hopefully this was a beneficial. I know we kind of spent a little bit more time than usual talking about some of this higher level overall market stuff, but when we started to see this rejection taking place yesterday, and talk of tariffs and the certainty of those going into effect is ramping up, I think that is going to be the catalyst for things to break down. If anything is going to cause us to break down, it's going to be this trade war that's setting up. So just keep your heads on a swivel, be flexible, be ready to play downside, don't get stuck. I've seen a lot of people just getting, their asses handed to them, thinking let's buy every dip because that's, how the market is supposed to work. And when the market's on easy mode, yeah, absolutely. But we are starting to break down from easy mode. And as you can see here from a Neptune perspective, also, I should have mentioned this earlier, we've caught that bounce so far, but I think as soon as that gives way, this 55, 51, 50, if that gives way, we're looking for the yellow zone and probably eventually onto the green zone before we do see a true directional shift for an extended bull run back to the upside. So that's just how I'm looking at all this from a overall perspective. Would you short the market, buy longer expiration puts? Hey, I wouldn't. I don't do it blindly, right? Have a plan, have a strategy in place for how you're going to load those puts and handle those puts if things don't move in your favor in the near term. Because certainly, again, with kind of how all this is set up, a tweet could, take your puts and hammer them pretty hard for a few days before it ultimately pushes back in your direction, right? So, and vice versa, right? You could be in calls, a tweet could, blow those up, short term, and then ultimately a tweet a few days later sends it back up, and you make a ton of money. So this is not going to be an easy market to trade, at least not in the foreseeable future. Not until this trade war stuff gets settled, and possibly not until we see a deeper pullback, and then we'll go back to easy mode. But this is just what I'm looking at. So yeah, I don't hate the idea of having puts in place as a hedge. I would say that longer expiration puts as a hedge, money that you're okay. If it doesn't ultimately pay out, it's there, kind of as protection for other exposure that you have, right? Don't just hold puts only. If you're going to use it as a hedge, for it to be a hedge, it has to hedge against, essentially a position of exposure in the opposite direction. So, I just hate to say blindly, yeah, buy puts and hold them, and those will pay out in the long run. I certainly would recommend them as a protective measure. So yeah, I think that makes a ton of sense, Kenzo, for sure. All right, so let's get to our trade plan reviews, and then let's work on some new trade plans. That's what we're here for. Probably not the worst idea, Trading Dad. I'm not a financial advisor. I'm not certified to give any kind of financial advice. So I don't want to go there. I will just say that I personally am heavily in cash, some dividend exposure and stuff like that, things that aren't super volatile. But as far as growth names and volatility, names that are, tend to move with some volatility even when the market's not uncertain, I'd be very careful having too much exposure to those types of assets, at least until this stuff gets sorted out. And, I could absolutely be totally wrong about this, and in 3 weeks, some, tweet comes out and, psych, trade war's over, just kidding, let's run the market up, right? Like you never know. So anyway, let's get to these trade plan recaps. Let's see what's going on with the plans that we did Tuesday. Then let's work on a couple of new plans. That's the beauty of having these trade plans to kind of dovetail this into that overall market discussion. If we're ready to play these trades and these tickers upside or downside, and we have a clear plan in place, it kind of doesn't matter what the market overall is doing. We'll still find ways to make profit and benefit from these things in the short term. For me, again, it's mostly day trading and taking what I get within a day and not swinging a whole lot, because again, all this stuff can move so quick. And it's a lot easier to continue to compound your gains if you're not having to dig out of a hole of losses because you couldn't resist trading on a day or in a market where it's just not conducive to having a lot of activity and a lot of cash deployed into your trades. So let's get into it. Sorry, throat's getting a little scratchy. I think I went on too long of a soapbox there. All right, so MicroStrategy, this was one of our, trade plans from Tuesday's live stream. This one has not really done anything since Tuesday's live stream as far as our plans are concerned. It is pulling back with the rest of the market, also forming a little bit of a bear flag going into the open here this morning with these SMAs moving up above 318.21, our put entry. Here on the 15-minute, I do like that 318.21 put entry even more now than I did when we did this plan on Tuesday. So keep this one on watch. But so far, nothing to see here. Oh, sorry, that was a question for Chris. Chris, you got a question over here in the YouTube side of things about the Friday live streams, and I think the answer is yes, he still does them. I think we didn't have one last week. Oh, yeah, that's right. CMG. Chris asked for that yesterday. That's right. I'm also expecting upside. Well, I will say this: my last couple of Chipotle visits, they did not give me a chode-shaped burrito, so that's a good thing. I think that makes me bullish on Chipotle as well. Let's see, what are we doing here? So Hood, this was another one of our trade plans from Tuesday's live stream. Let's look at this one on the 15 real quick. So this one has given us, let me shift this over to the current price action, has given us a breakdown, right? Broke down below, came back up, back tested the 200 SMA, gave a quick check there at the 333, but broke down below, back tested, and ultimately hit PT1 there yesterday for puts. So targets hitting on hood, and now back testing, and looks like finding resistance here. Perhaps another retest of the put entry before we push for PT1 and potentially PT2 if the market's looking bearish today. So hood playing out to the downside, targets hitting. Good trade plan, good setup there. And then Boeing, last but not least, this one does look like it's sliding and perhaps going to slide even further to the downside here with the 333 potentially giving way here pre-market. Overall push down, got below our put entry, is trying to hold this 333 a little bit, but as we can see, and Boeing doesn't, as you can see by these little hash mark candles, not a great extended hours mover. So, let's not get too ahead of ourselves on whether or not this 333 is giving way. But if we open below 178.22, especially if we open up below and see some resistance on a back test there, that certainly looks like a good setup to play Boeing for some downside. So let's get to some new trade plan requests that you guys gave me this morning. We had Lulu from Unknown Review Views. Let's see what we got here. Playbook. So sorry if we spent a little extra time on the kind of overall market scenario, but I think time well spent personally. Hope you all agree. All right, let's clean this up real quick. Been a little bit since I've looked at, the Lulu chart. Anytime there's some Lulus walking by, you're definitely taking a look. All right. So, nice bounce off that weekly key buy pressure there on NTS. Get out of here. There we go. All right. So, how do we want to handle Lulu? I mean, this is definitely going to be a downside price target on the put side. I can tell you that already, just based on that confluence alone. But let's take a look at this on the hourly. All right. 333's heading for a confluence there. We did just reject that. It's a pretty good daily level. I think this could be a good call entry, actually. And it could lead for a retest, potential double top to that spike right there. So I like that as a PT1. Stop loss. Gonna fill in the blanks here, but right about here. For that upside plan. So there's that weekly bounce target down there. So where's the entry potentially for downside? That's what we need to find. Yeah, it could be just a little bit lower actually. Right about there. That looks like a good opportunity for it to open up that room down to that first price target. Looks like about a 1-to-1 risk reward ratio. Is there a valid case for a different stop loss for the downside? Let's take a quick look at that. If not, we'll leave it where it is and share it with the upside trade plan. I don't know, that 328.55 weekly level, yeah, I think we can tighten that up a little bit, actually, without potentially getting shook out prematurely. So we can tighten that up a little bit, giving us a better risk reward to that first price target to the downside. Some prints just above this, but I think be smart to go ahead and take some more profits there at that weekly resistance at 370.50. Then this could potentially make a nice move up to this next, this next weekly resistance up here at 387.74. So I like that set up to the upside. Downside, let's see where our other targets are at. This is an interesting level that I don't have marked yet. Yeah, right here. That I would certainly, but it's not a weekly level. Let me fix that. 295.24, and then from 295.24, bingo, down to 283.74. All right, so let's set this up on the trade plan navigator. All right. 345.69 up to 362.18, 370.50, and 387.74 with a stop loss at 332. Whoops, 332.24. Put entry 319.19 on down to 304.32, 295.24, and 283.74. Stop loss at 328.55. Separate stops there. All right, there we go. Let's adjust this just a little bit. There we go. That looks better. All right, so let's get this posted. And then let's set up our alerts, and we'll be good to go. All right, here's the Lulu live stream plan. And over in the Elite chat. And let me grab message link. Alerts. Set these up. We'll give this a week, so next Thursday, close of business. 327. And then last but not least, let me save this template. Whoops, remember the symbol. Cool. All right, we're good to go. So just talking through this real quick, this Lulu live stream plan. What are we looking for? We're looking for a break over 345.69. That should give us upside targets at 362.18, 370.50, and 387.74 with a stop loss average down at 332.24. To the downside, we're looking for a break below 319.19. That should bring targets at 304.32, 295.24, and 283.74 with a stop loss average down at 328.55. Those are your Lulu live stream plans. Go get them. All right, so we had Chipotle. I saw Flow from Ryan. Let's see. Did I watch the Chips movie? Yeah, I did forever ago, but yeah, man, Lulu is, buy that stock. let's keep them let's keep them innovating and making butts look even better than they already do. All right. Let's see. So, sorry, I wanted to get through I'm sorry, there's a ton of stuff in the chats here. I just want to make sure I'm not missing ticker requests, anything on Apple or Boeing. And then I know we've got Chipotle and Flow. Okay, let's see how many of these we can get through. Let's go. So what is this? This is, I feel like somebody asked about this recently. Maybe it was, Ryan, did you ask about this once before, maybe? It's like a food company, Flowers Foods or something, I think. Yeah. Low volume. 80% dividend ratio. What? That doesn't seem right. All right, so let's take a look at this real quick. I've never looked at this chart before. So let's see what we can see. Do you know if this one's optionable, Ryan? Does it have options? I don't want to sidetrack and try to pull up the options channel on it. So if you happen to know. Okay, just curious. All right. This one's very rangy is probably the right word for it. All right, let's see what we can see. Clearly there's a bunch of support here that it's trying to hold. The question is that where's the actual level? I think it's a little bit higher, not right where those wicks are hitting. Yeah, it sits a little bit more like right here. Whoops. Oh. There we go. All right, where are the other levels on this chart? Feels like there should be a level in here, but it's not really reflected in where those bounces and rejections are happening. So we'll circle back to that. Definitely have something here. Let's work our way up. That might be easier, and then we'll go find our downside levels next. Yeah, something hanging out there. Yeah, that's pretty good, actually. I like that. Sorry, I'm having a inner monologue here with myself as I decide where these support and resistance levels are. All right. Yeah, I'm really surprised that that's kind of more of a space in there, and those aren't catching a little cleaner on both sides, but it's okay, is what it is. This is going to be a circle back. I'm curious to see where both of these levels play out on some other time frames. Yeah, I do like that though as a weekly. This level as well. That should be good. All right, so let's circle back to these guys real quick. Yeah, I think we've got a decent daily level on that one. Resistance. Show me some good support somewhere. There we go. Yeah, it's okay. I like that. So it's just a couple of daily levels that are sort of right there side by side. That's what that was. I was hoping that they would connect a little bit more on the weekly level or the weekly chart than they did, but not the case. So Ryan's got the scoop on this one, it sounds like. Okay, that's good to know. You're thinking agricultural tariffs push more utilization of U.S. buying from U.S. food companies and suppliers, I guess is the thought there. All right, let's take a look at this. I mean, I like the method to your madness, Ryan. I will say that. Okay, I like it. At least there's a good thought process behind why you want to dig into this one. So I can appreciate that for sure. Right? Exactly. Chris nailed it. Okay, let's accelerate this. I do want to try to, and I apologize for anybody who I might be kind of skipping over a little bit, but I do want to take a quick look at this Chipotle chart. For anybody who has joined these live streams in the past, you will know, and I think it's been a while, it's been a little bit since Chris and I have teamed up, where Chris kind of says, hey man, this is one that we need to look at, and I write up some plans for it, and it winds up being a money printer. So Chris and I, when our powers combine, we form Captain Xtrades. Then you get Shinobi and some other cats in the mix, and all of a sudden it's Voltron, and nobody wants to mess with that. All right, let's see. Yeah, hood puts did pay. All right, let's go. This is our downside entry for sure. Below 1801. Let's make sure that it looks like clear. Move down to 1751. That's kind of what I'm vibing at the moment. That's right, Shinobi. Interesting little dip there below. All right, I don't want to get too hung up on this one plan. This is an interesting, and I think that wick did touch a little bit below the level I've got on the chart so far. So I do want to take a look at this. This could wind up being our price target. Let's see. Yeah, I think I saw it as it flew by. Come on, where you at? Where's that touch? There it is. Boom. Yep, that's right where we want it to be. Okay, cool. So that's first target to the downside. From there, I think we play these two daily levels. Certainly could bounce off of either of those and send things back to the upside. So that's 1, 2, 3 targets to the downside. The only other question is, where's our stop loss for this downside plan? I think it's sitting right here at 18. Ooh, that's a little too tight. You can't give it 17 cents to play out, right? Oh no, 30 cents. On an $18 ticker, still seems tight. Let's give it a little more room. Yeah, I'd say you can give it. Actually, there's a small, well, it's filling that gap here this morning. So, yeah, again, we have another scenario where there's like a couple of levels really close to each other. Let's see what this does from a risk-reward standpoint if we give it to this gap fill that it's rejecting this morning for this downside plan to play out. I'm going to pull out the old school short position real quick just to see. All right, it's at a 1-to-1. It's not, which is not ideal, but I think anything less, we're just not given the trade room to work. That's a great way to just get stopped out unnecessarily and take a loss unnecessarily. All right, So upside, yeah, I like a break back over this 1892 level. Targets over that 1927. So again, kind of, but again, I mentioned earlier as we got into this trade plan, this one's a bit rangy. Second target. And third target, let's take it up to this weekly level. So kind of set up for us there nicely on that upside. Okay, so I don't need that. I need this. 1892 up to 1927, 1977, and 2025 with a stop loss at 1858 downside, 1801 down to 1741, 1688, and 1652 with a shared stop loss at 1858. Okay. Indicators on. Drawings off. All right, so here is our flow live stream plans. Thank you, Ryan, for your insights on this one. I do appreciate it. And let's get this in the elite chat. Let's get my message link. Alerts. Keep doing that. One day I'll learn. This is our flow live stream Thursday, 3/27. And let's also lock this in to trade plan slot. Let's talk through this real quick, and then let's take a quick look at Chipotle before I have to break away and get this SPY plan done for today. So what are we looking for here on flow? We are looking for a break above 1892. What the F? Oh, sorry, folks. My bad. I was like, why are those labels so far off? Because we went from a $300 ticker to an $18 ticker. So and you know what? Dang, I screwed up a couple of things here. My bad. My apologies. I left that turned on too. There we go. Man, I got to redo a bunch of stuff here. Okay, well, let's get it done. I don't want to set this up the wrong way. That's not kosher. All right, let's do this again. Regular trading hours, 30-minute. All right, we're good for our alerts. The message link is in. I'll just post an updated chart or something. Okay, so let's... Aha! See, I told you I'd learn. Flow live stream. Steam. Stream plan. 3/27. Good enough. I don't need to know it was a Thursday. All right, those are locked in. That's good. Let me give you guys a better chart. Sorry about that. My bad. Better chart for above. I'm just going to post this. Sorry, I forgot to adjust those labels there. So, again, looking for a break over 1892 that should bring targets at 1927, 1977, and 2025. Stop loss average down at 1858. Downside, we're looking for a break below 1801. Targets at 1741, 1688, and 1652. Stop loss average down at 1858. That's it for flow. Let's go. All right, Chipotle, can I figure something out really fast? That's bizarre. These aren't... Why does that look weird? Yeah, I feel like there's a bunch of levels that aren't showing for some reason. Why are these not displaying correctly? Sorry, folks, I don't mean to get sidetracked here, but this is just strange. There are a lot more levels on this chart than are displaying. Thanks, TradingView. I have no idea why it's doing that. That's very weird. Okay, well, let's make the most of it. Of what, well, at least of what we can see. All right, so Chipotle, kind of flat topping right up against this 50-12 resistance. All right, let's do this. Let me get the SPY plan together. I just don't want to phone this in. I will circle back this morning. We're not going to do it here on the live stream, but I will post in the Elite Options chat this morning a Chipotle trade plan. But we've got 10 minutes left. I do want to take a little bit of time with the SPY plan this morning with kind of how up and down things have been lately. So we're going to call it a stream for today, but I will, Chris, get a Chipotle plan posted for you, brother. I do want to take a look at it, but I'm just looking at time constraints, and TradingView's doing something very weird. I feel like I've got more levels on this chart than are displaying, and I don't want to get caught missing a support or resistance level that puts us in a bad entry. So with that being said, thank you all so much for joining me. As always, I really do appreciate it. We will be back next Tuesday morning at 8:30 a.m. Eastern Standard Time. I'm going to go get that SPY plan put together and posted in the watch list. That is our daily moneymaker, so keep your eyes out for that. Until next Tuesday, this is JT signing off with our Xtrades FOMO live stream motto: plan your trades and trade your plans. Go out there, get some green. Have a great weekend and rest of your trading week, folks. I will see you all in the chats, and I will see you back here next Tuesday morning at 8:30 a.m. Eastern Standard Time. Take care. Appreciate you being here.